Hey guys, thank you. Thank you for the interest shown in my video yesterday, and thank you for the call in the morning. Few students, especially CMA gang, and few from CA. And thanks a lot for your encouragement and for your support for my sessions. As discussed in the morning, instead of going in a regular one-on-one from basic to top, I plan to first fulfill the requirements of those who call me for some sessions. And yes, these students very interested, and they are very committed, and they want me to teach a topic on issue of share capital and its accounting, right? And guys, this is a part of company accounts. It is there both CA foundation, CMA foundation, as well as CMA intern. Now, what is a share capital? It is a share capital is what the company start with. And when I talk about share capital here, I'll specifically talking about equity share capital. And what is a share? Share is a part of capital. Means total capital divided into smaller denominations, and each denomination is called as a share. Example, 1 lakh is a share capital, equity share capital, and face value of each share is 10 rupees. Then we can say that there are 10,000 shares of 10 each, total into 1 lakh. Here each 10 rupees is a share. Suppose if I am holding, say Venkat is holding 100 shares, it means Venkat's capital in the company, or we can say Venkat's portion of capital in the company is 100 into 10, that is 1000. So in 10,000 shares, I am holding 100 shares. So this is how we should understand a share is a part of the total capital. It's a smaller denomination. Now, when a company issues shares, public will buy. I'm talking about a public limited company. Even if it is a private limited company, people will buy the shares, and person who purchases a share is called a member. Equity share, as I told you, I'll be talking only about equity share now. Now, for the purpose of understanding, you also need to know what is a capital. See, we have things like authorized share capital. What is authorized share capital? This is the registered capital. Assume company shares are 1 lakh. Company mentioned in its memorandum of association that it will have 10,000 shares of 10 each. It means the maximum shares that the company can issue are 10,000 shares. No restriction, the company can issue more, but for that the company need to increase the authorized capital, and that is a different topic, will be dealt in corporate laws. Now, after the authorized capital, this is registered capital. It doesn't mean I need to issue all the 10,000 shares today. I can issue part. Assume I issued shares, issued and subscribed. I can say issued number, issued capital. I issued how many shares? Assume I issued 8,000 shares to public for subscription. Now, what is my issued capital? 8,000 into 10. So, my issued capital is only 80,000, whereas my authorized capital is 1 lakh. Now, the second is called, I am going in order, authorized capital, issued capital. And the next one is subscribed capital. Out of 8,000, assume public subscribed only 7,500. So you received applications only for 7,500. Hence your subscribed capital is 7,500 into 10, 75,000. See the difference? I can issue up to 1,000, 10,000. I issued only 8,000 and I got applications for only 7,500. So my subscribed capital is 75,000, whereas my authorized is 1 lakh and my issued is 80,000. Then comes, after subscribed, we get called up capital. Right, what is that? Called up capital. What is called up capital? I received 7,500 applications, but I didn't say you should apply with full amount of 10 rupees. I told them you only apply 5 rupees. As of now, the balance 5, I'll call you as and when I require. So my called up capital here is 75,000 into 5 and it is 37,500 is what I called. I only called 5 rupees on each share which is subscribed by the public. So my called up capital is less than my subscribed capital. It can be equal but it can't be more. And then comes my paid up capital, which is, assume everybody is paid. So my paid up capital is 37,500. Assume everybody is paid. So the order is authorized, issued, subscribed, called up and paid up. Now, if at all out of 7,500 only 7,000 guys paid, then my paid up will be 70,000 and the balance called as, my paid up will be 7,000 into 5, 35,000, and the balance is called as calls in arrears. That we will discuss when it comes into regular flow. Now again, how do we break up the capital? Authorized, issued, subscribed, called up and paid up. Now this is the way we need to understand what is capital. Capital means equity here and share means a part of total capital, and they are denominated in 10, 20, 30, 40, normally multiples of 10 rupees. And we have breakup of this capital, and the hierarchy is authorized. You cannot issue beyond that unless you increase your capital. Authorized, and then issued can be equal to authorized, subscribed can be equal to issued, called up can be equal to subscribed, and paid up can be equal to called up. So the hierarchy is authorized, issued, subscribed, called up and paid up. So this is the basic understanding of your share capital. Now comes to the accounting part. Now accounting part, accounting for issue, I divided the same into 4 parts. Part 1, we call it as accounting for share application, and number 2, accounting for share allotment, and number 3, accounting for share calls, and number 4, accounting for share forfeiture and reissue. So part 1, part 2, part 3, part 4, wherein 1, 2, 3 is actually single part, should be read together. 4 comes only after all the first 1, 2, 3 parts. Now, so why these many parts? Just for understanding, because unless you apply, I cannot allot, and unless I allot, I can't make a call on you, and unless I make a call and you fail to pay, I cannot forfeit your share. So this is an order. First you should apply, then I should select and allot. After allotment, I'll call the balance money from you, and if you pay, no problem. If you don't pay, then I have a right to forfeit. So 4 stages: share application, share allotment, share call and share forfeiture. These 4 stages we will learn in detail now with small examples and accounting entries. Wherever we write an accounting entry and we match the accounting equation. So now stage 1 will go into, as prescribed in the example about authorized, subscribed, issued, paid up, called up and paid up. I am going here is my first stage is application. How many I issued? 8,000. So dividing the parts, 100 rupees, whatever the 100 rupees, now I am dividing into parts like 20 on application, 30 on allotment and 25 on first call and 25 on final call. So we divide into parts 20, 30, 25 and 25. So the accounting should happen for 20 rupees, 30 rupees, 25 rupees and 25. We assume all shares are purchased and all calls were made and all calls were duly subscribed and paid. Now, chalo now here, stage 1 first entry. When I issue the share, when you apply, what I receive is bank account, my bank account, debit. How much I receive? 8,000 applications into 20, that is 1,60,000. So my debit is 160, and you know that every debit there should be a credit to equity share application money account, and this is also 160. We write a narration like this: being application money received on 8,000 applications at 20 rupees per application. The quantum of shares and the price both way posted here. So bank to equity share application money. How accounting equation will satisfy here? Your asset is your bank, which is 1,60,000. Your capital 0, as of now no capital, and your application share external liability is your share application money, which is 160. So the equation is what? The equation is assets equals to capital plus external liabilities, and this equation is satisfied. Right, my assets 160 equals to my external liabilities 160, and my accounting equation perfectly satisfied after the first entry I passed for my equity share application money. Hope guys understood. Now we'll go to the second stage immediately. Stage 2 is what? Allotment. What is allotment? All the shares whatever you apply may not be all the applications whatever you apply may not be issued. Few might not satisfy the conditions. So I issued 8,000 applications, and in this case I received money in all 8,000 applications. But now I allotted all 8,000 because I found every application is in line with my requirements. See allotment means what? Converting your application money into capital, because I confirmed you guys. So the entry will be equity share application money account, debit 160. Now I confirmed all of you as my shareholders. I will transfer the same to equity share capital account, that is 160. Now what I'll say, being 8,000 equity shares or allotted. Now I allotted means converted your application money into share capital. Now question comes, now you guys are my shareholders, immediately you have to pay your allotment money. Immediately you have to pay your allotment money. Now allotment money you have to pay, but did I made a call? No. Did I ask you? No. So I'll pass it due entry. What is due entry? Equity share allotment account. How much money you should pay on allotment? 30. That is 240 to equity share capital. Same 240. Now I'll write here being allotment money due on 8,000 shares at 30 rupees each. So I passed the due entry. Means what? Now you are my members and I am asking you to pay the allotment because I allotted the shares to you. You have to pay me. See, in application first money comes and then we start allotment. But in allotment first I'll ask, then you pay. Unless I ask you, you are not under any obligation to pay. So once I ask you, right, now you have to pay. Assume everybody paid. So the entry will be bank account debit 240 to equity share allotment account 240. So ultimately what happened? My allotment and my allotment both are cancelled and it is back to equity share capital. Now after this stage, what is the status of my accounting equation? Let us see. What happened to my asset? My asset is bank. Total money received is 240 plus 160, which is 240 plus 160. Total 50 on 8,000, 4 lakhs. So my asset shows 4 lakhs and my liability is capital. My capital, equity capital, shows same 4 lakhs. No application money, transfer to allotment, no allotment money, transfer to capital, and no allotment money, transfer to capital. So both the application and allotment were transferred to capital, making your asset 4 lakhs and making your equity 4 lakhs. With this, your accounting equation assets equals to capital plus external liabilities again satisfied after this stage. So 2 stages and we proved accounting equation satisfied in the 2 stages. So how many entries we passed as of now is, the very first entry we passed is 1 bank to application and the very next entry we passed is 2 application to capital. Since we allotted and then immediately we call the allotment money due to capital, and when you receive the money, the 4th entry you passed is bank to equity share allotment account. So all is done and after second stage your assets are equal to your capital. So assets equal to liabilities. My accounting equation perfectly matched. With this I go into my 3rd stage, which is calls, and here is first call. Normally first call and then second call, but entry remains the same. In first call what we should do first? Again I am telling you, after application every stage due first, payment next, because unless the company makes a call, there is no liability on me to pay. No liability on me. They call me 50 rupees, I paid 50 and Aram say I'm just having my other life. Don't bother. Now immediately the company made a call. Say maybe after 2 months of allotment, company needs money and it made a call. So what is the entry? Equity share first call account. 25 rupees into 8,000. What is 25 rupees of 8,000 is 2 lakhs. 2 lakhs. 2 equity share capital. Why I am calling? I am calling towards capital. So 2 lakhs. Write in detail. What is that entry I should write here? Being first call of rupees 25 made on 8,000 equity shares. Now we forgot to write an entry in narration here, which is being allotment money received on 8,000 shares. See here in the top we call it as application, where in the first case we call it as application, but now we are calling it as share. Why? After allotment it becomes a share. Till allotment it is only an application. An application can never make you a member. Remember guys, only after allotment you becomes a member. Right. So being first call of 25 rupees made on 8,000 shares. Now it is due, and what shall I write next? Receipt. Assume everybody paid. So receipt, bank account, debit 8,000 into 25, that is 2 lakhs. 2 equity share first call account, 2 lakhs. Again what happened? Your first call got cancelled and it is bank to capital. And narration being first call money received on 8,000 shares. Let us see the accounting equation. Asset, bank, you received total 4 plus 2, 6 lakhs. And your capital, equity is 6 lakhs. And your accounting equation of capital assets equals to capital plus external liabilities again matched, and your balance sheet is exactly tallied. This is stage 3, first call. In stage 3 one more call is left, that is second call. Let us go to the second call entries. Similarly like your first call, you should make a call first. How do you make a call? Equity share final call. Here it is second call. Instead of second call we can call it as final because only 2 calls, 20, 30, 25, 25. We divided, right? Application, allotment, first call and final call. So I am calling it as final call. Final call account 8,000 into 25, 2 lakhs. Whenever I write this, I should write debit as well. Then 2 equity. Why I make a call? Towards capital? Yes, equity share capital, which is 2 lakhs. And the narration will be being final call of INR 25 made on 8,000 shares. And immediately assume everyone paid. So the entry will be bank account debit 2 lakhs. 2 equity share final call. As usual we should reverse the call, which is due debit, reverse receipt. Being final call money received on 8,000 shares. With this our 3 stages are completed, and accounting equation, if you see, asset, your bank is now 8 lakhs total. All the 800 rupees has been called for and received, and your capital equity 8 lakhs. It is again 8,000 shares into 100. Right. This is the basic understanding, a very basic understanding of entries. And how many entries we completed here? After the 1, 2, 3, 4, we started writing for call. Fifth entry, receipt of call. Sixth entry, again final call. Seventh entry, and receipt of final call. Eighth entry. With this, all entries are done, and your balance sheet is very much tallied. Assets 8 lakhs. How assets 8 lakhs? 4 stages. Right, your application, you received 8,000 into 20, and your allotment, you received 8,000 into 30, and first call, you received 8,000 into 25, and your final call, you received 8,000 into 25, that is 2 lakhs, and total you received 8 lakhs, and the total 8 lakhs represents equity share capital. A very basic understanding of your accounting. This is the first thing we should understand. Lot to learn, like premium, discount. Of course, equity shares can't be issued at discount now, so we can ignore the topic. And arrears, advance, pro rata, and then cancellation. Many topics to learn. This is just a basic idea of how do you account for share capital. And how many stages, guys? I said 4 stages. What are the 4 stages here? Application, allotment, call, and forfeiture. We discussed only up to calls. In the next video, we will discuss about how do we treat calls in advance and how do we treat calls in arrears. Right? Thank you. Keep watching, keep encouraging, and keep asking and posting your doubts. Love you all. Bye bye.